A bold turnaround can change the narrative of an entire business. For Monde, long shadowed by doubts over its plant-based meat segment, that turning point finally arrived in the first quarter of 2026. Monde's meat alternative arm, led by the Corn brand, swung decisively back into the black, delivering core income at ownership of 87 million pesos, sharply reversing the 58 million peso loss from the same period last year. Core EBITDA more than doubled to 325 million, signaling not just survival, but real progress. The most telling achievement, an 880 basis point surge in gross margin, climbing to 31.8%. Transformation benefits, strategic pricing, lower raw material costs, and improved supply chains all fueled this margin recovery, making the segment less of a drag on the group. Yet, sales figures underscore the complex reality. Net sales for meat alternatives rose 11.7% to 3.68 billion pesos, but stripping out currency effects and calendar quirks, real sales growth was modest. Volume slipped, offset in part by gains in Corn's core UK business. The bottom line, demand hasn't reignited, but losses have been contained, and that near-term stability matters most for investors. Zooming out, Monde's group performance also impressed. Group net sales advanced 9.1% to 22.78 billion pesos. Gross profit reached 8.24 billion, up 13%, and reported net income jumped over 34% to 3.67 billion. Core income after tax at ownership posted an 11.3% gain. Asia remains the growth engine, with Monde's APAC branded foods and beverages delivering 19.09 billion pesos in net sales, about 84% of group revenue, anchored by strong domestic volume and standout performances in cakes, culinary products, and beverages. Investors saw a strengthened margin profile across the board. Group gross margin improved to 36.2%, with APAC stability complemented by the meat alternative rebound. Even more encouraging, operating cash flow nearly doubled to 4.63 billion pesos, while cash reserves rose to 16.59 billion. Supported by this performance, Monde declared a dividend increase, offering 0.24 pesos per share, outpacing prior year's payouts. The financial foundation remains solid, with manageable leverage and covenant compliance. Still, Monde faces rising costs. Operating expenses climbed nearly 20%, trimming some margin gains. The story is clear. Monde's domestic core remains robust. The troubled plant-based segment is stabilizing, shifting sentiment from skepticism to cautious optimism. For investors, the focus now turns to sustaining this momentum and realizing the full promise of transformation.